Hey, Robert.
Hello.
We're restaking weekly, and we're having the pleasure of having Robert Drost. What is your title?
CEO, Executive Director of Eigen Layer Foundation or Eigen Foundation.
Okay, and yeah, we're really excited to dive deep into the vision of EigenLayer and the role that the foundation plays in realizing that vision. I've had the pleasure of knowing Robert since we met in Thailand,
Yep.
and I've been like,
Did you win the push-up contest?
I sadly didn't. I came second.
You came second.
Yeah.
Okay. Oh, it's still pretty good though.
It's not too bad.
Everybody was pretty, pretty strong in that competition.
Yeah, it was a fun time. But yeah, let's get into it. If we could start maybe introducing a bit about yourself, your career, and how you got into EigenLayer.
Yeah. I'll try to do a quick version. But it is interesting how people get into crypto. I think if you ask anyone in crypto, we all seem to have a unique story. So for me, just my background is that I worked for a long time in the Silicon Valley tech field. I did PhD in electrical engineering at CS, and I also did a PhD minor in computer science both at Stanford. And then I went into kind of industrial research plus advanced product design work at Sun Microsystems in the research lab. I also pushed out some processor projects as well as some ancillary storage and at chip levels and box levels. Over time in my career, I kind of moved up in the Web 2, Web 1 and then Web 2 space, where I was doing infrastructure of larger kind of combined server storage networking. And ultimately was working at the forefront of high performance data center build and attacking very kind of difficult problems, which flipped me over into the software space. So I was getting a lot into distributed computing algorithms, high performance algorithms, special designed. Back then, there was a very fast pace of new programming languages, new paradigms in how you kind of represented data and solve big problems. GPUs were just starting to happen at that point, general purpose GPUs, GPUs that eventually got into CUDA and then, of course, all tensor math. Then I did a short stint at Oracle, again, research labs. Then I did a startup in the distributed software-defined networking space.
Okay.
So I got my first exposure that I did want to get in the startup to truly decentralized protocols. Finished that up, sold the company to one of these networking companies, one of the big competitors to Cisco, Arista Networks. Came into crypto. I was actually going to go out, this is 2017 timeframe.
Okay.
I was going to follow up on some work I'd done in the past on AI, since at that point deep learning had happened a couple of years prior from Jeff Hinton. But I always had a nagging problem that when Facebook first came out in the early 2000s, I used it for a month and then I deleted my account because I said, this isn't going to go well. Mm-hmm. The privacy problems in the data, I'm like, I just don't see this being a good outcome. And yeah, it did not work out well from my perspective. I don't mean to be negative. There's a lot of good things in the connectivity, but it just didn't go well. I always had the opinion something could be different. And I met Joe Lubin, one of the business founder, if you want to call it, of Ethereum. He helped really take it off the ground, and then he did Consensus, which is what brought us Infura, MetaMask, really in some sense made Ethereum the success. It was always a great technology, but you need business success. And in the early days with the ICO and the token launch, really provided that. I came in at the start of the bear run. So I kind of came in to do consulting for Joe Lubin for 6 months.
That was the 2018 time?
2018 timeframe. Then Joe wanted to really do some open source R&D laboratory work. So he funded a laboratory. I had 24 researchers working across layer 1, helping to kind of build out the theory around rollups, the Ethereum 2 thing merge. I mean, did a piece of that. So in terms of corporations, we were spending real money having developers work on all of that. Now the EF's done a tremendous job. I know they get a lot of hits, but the fact of having so many clients, so many teams with business success, so many L2 rollups, finally coalescing them down with shared sequence and everything is amazing. So I did that for about 6 years. I had background raising money, everything else. Joe Lubin also had me do some research partner in some of his investment work, and eventually did that with Ethereal Ventures, one of these. Yes. Really good. I love it. The managing partner, the Minteos, amazing. Loved working for her. But then Sreeram and I knew each other for a long time. Always was, kind of, I feel it's deeply involved as like somebody on the outside would be, always from the technical side as well. And so when the opportunity came up that they were forming Foundation, it was time to start decentralizing, moving to a token. I was happy to do it. It fulfilled my vision, the kind of verifiable cloud, autonomous services, everything that I wanted of being able to get Web 2 apps, but really the entire Web 2 stack. Not saying it's terrible that we have public clouds, but like you can always improve them. In the new age of crypto, there's a better version of public clouds. And so I'm very passionate. I think anybody can go look at what Sreeram's talking about, what I'm talking about. Very quick, 15-minute talks, listen to it at 1.5x, look at the slides. You can really catch up on what I think is going to be definitely this bull run, next bear market, next bull run. I'm very optimistic that we're going to see a huge transition over to Web 2, not just in the crypto space, but everywhere. And we're going to actually be bringing over the best people building startup companies into Web 3. Very exciting, a lot of new revenue and so forth.
For sure.
Yeah.
EigenLayer is like the place to build off-chain applications in a decentralized way. And that's a kind of a unique paradigm for crypto builders who are used to just like, okay, let's build an L1 or let's build a smart contract level app. But what's the point of decentralization in those use cases? Yes, there is some value, but I think there's also value of decentralization in non-crypto use cases. And that's kind of what EigenLayer is getting at. It's like real world use cases that we can create 10x more value for the end user using decentralization as like just a building block.
10x more, exactly. I'm going to do, maybe drop back to 1x if you're watching the video. I'm going to dive down into something deep because it leads to exactly why there's something unique and new that you got an EigenLayer that we haven't had before. So going back to like why blockchains work at all so well is that they set up a peer-to-peer network of software nodes. The protocol writes it, people run it as operators, whether it's Bitcoin or Ethereum or any of these other decentralized protocols. You run it, you're in a peer-to-peer network and you follow a protocol that, kind of pays you tokens for doing the right thing. And then either you don't earn the tokens in proof of work or you get actively slashed in proof of stake if you do the wrong thing. So it's very heavily incentivizing to doing the right behavior. This is the underlying idea of how to get good decentralized computing when you don't trust other people. Rational actors do the right thing. But the key point is that all of that infrastructure is purpose-built for blockchains. Beautiful, blockchains are amazing. It's like verified transaction ledgers for databases. Truly an amazing feature. We're going to be using those everywhere forever now in computer science. But listen to what I said before. Peer-to-peer networks that do a distributed software application with crypto economic incentives so you can be trustless, that actually maps, if you could look at it the right way and squint, to any distributed protocol that you need to run. You're running a distributed database. What is a CDN? It's a distributed set of nodes that have SSDs and know how to synchronize and give information out. So there's all of these distributed CS problems that, when you're Filecoin, you're mapping it and you're running the protocol as smart contract transactions. It's kind of nuts, right? You want to operate at the speed of TCP connections. If you're in a same data center, you're getting down to like 10 millisecond speeds. If you're in a local city, you're staying at 10 microsecond. If you're in a local city, you're staying well under 10 milliseconds across data centers. Across America, 60 milliseconds across the world, maybe 300-400 millisecond round trip times. So, you want to be able to run that for any possible peer-to-peer software. If you do that, then at that point, crypto economic protocol and security can be done for just software. Right? And so EigenLayer actually decentralized, people hear about modularization, data availability was like the first one that pulled it out. EigenLayer is the first protocol that in a sense has taken the core essence of crypto, which is the security commitments and the ability to incentivize people to do the right thing. And we have mapped it to any general purpose software. So it's not for the faint of heart. You're going to be doing this. If you're doing Snowflake, then you would go over and figure out how to redo the whole distributed architecture with this. Every dev is not going to do it. So devs want to see this as platform as a service, infrastructure as a service, software as a service. Devs have never wanted to rebuild Amazon Web Clouds. They want to build their freaking apps. But so EigenLayer is building, and if you go through the presentation, see how we segment it for the Web3 cloud moving into Web2, or now for AI agents moving into Web3, you will see that there are dozens, and if people are interested in doing it, it is a green field largely. This is a new type of computer science EigenLayer is not a platform risk because our entire token's purpose is to underpin the security that's needed. So you don't have to trust Amazon or any of the other public cloud providers to give you SLAs and to kind of, be secure and everything else. It's all done with cryptography and done with crypto economics. So that is, people really are wondering, what is the Web3 cloud? I just described it. The Web3 cloud is not one company. The Web3 cloud is a crypto framework that allows hundreds and then thousands of, open source project builders to have huge success and bonuses. Like, they're not actually having the software being competing against an Amazon packaged version of their software. It's just fundamentally better. So if anybody is thinking about doing startup, if somebody happens to be looking at this video from the Web2 space, I'm going to be spending a lot of time this year kind of doing a roadshow around the regular Web2 space, established companies, startups, schools, and so forth, and just try to educate them. This is a philosophy. I really feel like start of my career was a transition from Microsoft and things to Linux. Mm-hmm. It was amusing at that time that, they have to own up to it. People like Steve Ballmer and Bill Gates, they literally called open source a communist cancer, right? Yeah. And, they're completely wrong. Communism actually means something has less innovation. Reality is open source has innovated way more and way faster because it removed the competitive barriers and the monopoly lock-in of proprietary software. The Web3 cloud actually removes a lot of the barriers of monopolistic kind of capture that you get around the APIs of a given cloud. Why do you have to write to one API in Amazon, a different one to Microsoft, a different one to Google, a different one to Rackspace, different one to Equinix? I mean, it's kind of nuts, right? In Web3, there's one protocol for these storage things, one protocol for analytics. And I'm not actually saying that the existing public clouds disappear. Sometimes people think I'm saying that. They actually just supply the hardware, but they're now running crypto protocols. So they've kind of pushed it down under the software layer. So it's a very empowering technology, just like open source was. And people need to kind of understand that it's a little complicated. It's something new. It's going to take time, but at EigenLayer, that's what we're pushing on. So, it's a great place. I think people who are in the space are always commenting. It's been one of the best places in crypto. We are explicitly not competing with almost anything else in crypto because we're doing something net new. Yes. And in the end, we're bringing in net new revenue and we're bringing in net new markets. So we're also going to be helping to this yo-yo of bull markets when retail comes in, bear markets when retail goes out. Think about actually having the Web2 revenue for software and for hardware, $2 trillion a year. Yep. Let's actually get that money flowing through Web2 rails and getting paid to Web3, open source developers and projects. Yeah, this concept of Web3 cloud is really powerful, and it's pioneered by players like EigenLayer. When I'm talking to my friends who are Web2 engineers or non-crypto people, I use the way I explain EigenLayer is I'm using a concept introduced by Sreeram where what is the most powerful aspect of humans is that we can coordinate. Yeah. Man is hunter-gatherer. Yeah. And you rely on your brother to make sure the tiger doesn't eat you. And then eventually to do agrarian society, we need to coordinate. Yeah. And then now humanity has scaled so much, but coordination has remained the same. We are relying on trust between our brothers and sisters to thrive as humanity. Yeah. And what Verifiable Cloud, Web3 Cloud lets us do is software applications can coordinate between different actors, different stakeholders without the need for trust. Yeah. And I think like you said, this is not intended to replace existing solutions. It's intended to create net new value for society. And our job as builders is to find what use cases does this coordination without trust create 10 times more value than the incumbent. In what scenarios can we apply this concept that you just eloquently described to create 10x value? And as a business guy, I'm excited for the net new cash flows that are going to be unlocked by guys for example, Earnify via Opacity or something like that. So it's great to see people already building on EigenLayer and creating this net new value. And I assume through all your guys' hard work, there's only going to be more. I want to switch gears a little bit to this is a crypto native audience, and a lot of us are builders, researchers. The concept of token is integral to crypto. Whether you're building a protocol and you need a token for utility and security, or the financial dynamics of token is also underpinning, I think, majority of the space's actions, whether we like to say it or not. The token matters. So maybe you can share a little bit about what is the role of the foundation in EigenLayer, and what is the role of, and how does the foundation interface with the token?
just like to educate, because I think it's kind of, this is a part of the industry that's maybe hidden behind like a curtain for most of the industry participants. So
yeah, absolutely. Every foundation, I have to say, is going to be different, right? So I can only talk about like how we've gone forward. I actually could talk about almost every foundation that's in the space, but we don't have time. And
Yes.
so let me actually kind of talk about us. So a lot of foundations, and you'll hear a lot of these things. It's not like we came up with a lot of net new ideas. It's just our choice about how we package them. So Eigen Foundation basically minted around roughly half of the full token supply for Eigens. And we kind of split it a third between a third of that has almost entirely gone out to airdrops already. There's a little bit more that's still going out this year. Kind of to be defined, of course. So we're kind of working on that. A third of it, I come from a business background, absolutely. And I think it is really important to recognize that we're not only kind of working in this new decentralized world, it's very nascent. It is actually important to be able to do strategic partnerships and to have kind of, the ability for protocols and others to that we're working with to figure out like very high value add relationships that we're doing. And there will be, in a lot of cases, kind of programmatic token programs that are associated with it. We have some really clever people on our grant side that have come up with some great programs for it. We're not a traditional granting org. I think there's a lot of great people that are doing work in a lot of different things. We definitely do our parts of, public good fundings where I think one of the biggest, I think at the time we did the donation, it might've been the largest grant to the Protocol Guild Foundation. Protocol Guild at the Ethereum Foundation. It's a deep-rooted thing for people like Sreeram and me is that, we make sure that, the core OS of open source software that is being developed that we all use on, it doesn't just happen. It's real people with real careers who in a lot of cases are actually giving up a lot of upside by not doing their own startups. And so you got to kind of give a tribute to them. So 1% of our protocol tokens, which is the full kind of commitment they asked for, went to that. And so it ended up, I think when we actually did the donation, at $83 million
wow.
net token value, got dropped into a 4-year streaming contract. So it helped. It actually helps a lot. I mean, I've heard that from a lot of people. They appreciate it. I think we should be doing more guilds. I've actually kind of outlined a bunch of them and talked with the right people. We should be expanding that model. Public goods need to be developed and kind of paid for. So if you see my talks, actually, I give a list of reading for anybody who wants to like understand what's for my thinking around that. But then, we've obviously done a lot of stuff for token holders, stakers, for community members who have kind of built, great open source, sometimes proximal to us, sometimes more expanded. And that was about a third of the token mint. The other third of the token mint is going to be a lot more towards public initiatives. So kind of more traditional, having like councils with some mix of various types of people. Some, obviously that are quite close to the EigenLayer ecosystem. Some who are a little more broad, bringing in other views. Also people that bring in kind of a little bit of what I'm willing to stand by and argue for the value in the crypto space to try to figure out how to be, have a good relationship with regulatory. A lot of people kind of recoil at that because they're like true kind of almost like more on the crypto anarchist side. The reason I say that is that if you look at the core of like why regulation exists, its original intention, it may not be implemented well, but its original intention is to protect people who have a natural information asymmetry from the people who have more control over protocols or potentially have inside information. That's a good thing. I don't like people to get cheated.
For sure.
And so, let me just say so in general, our first guiding principle is like, make sure we're doing that. And kind of naturally, I think the regulation's a moving target. We have, I think a great window now, kind of joined in with some government task forces and stuff, try to like give that message even in the US to Capitol Hill. But move regulation where it's sane for digital assets. I think they are truly unique compared to everything that's been created before, no doubt. And so we're going to kind of move forward on that as well.
Yep.
And all three of those parts, what does that mean for the foundation? The truly net new thing that foundations have to do is that they have to handle a lot more of what's related to the token issues. So launching the token, helping to kind of steward the token in the open community. We definitely never market. We definitely never promote people to buy it. We really are actually talking about the value of the protocol, the long-term, what's being accomplished. We're trying to make sure that there's as much information out there publicly, really following what would be like best practices.
For sure.
So, that's essentially what we have to do. Those functions, we originally were actually thinking about doing more in the foundation. I think eventually we probably will do more. But right now, we're building so many new technologies on the product side that our marketing has shifted to a very product marketing focus thing.
For sure.
And then we're also doing a lot of stuff on the evangelism, everything else. The majority of people at EigenLayer are really still at the labs. And so they're kind of leading a lot of efforts. I personally and some other people in the foundation are doing our part. And even though there's people at labs doing things, there's people at our foundation org doing things, there's people in the community doing things, it's totally fine because we do them in public. They're public initiatives. It's permissionless. Anyone can join. One thing I love about crypto is, the way that you actually get involved in a community is they're all open, just permeable membrane, just come in and kind of work in the space. Whatever you bring, you can bring artistic, design things, you can bring UX, you can bring philosophy, education, whatever are the areas that you want to work in. There's a spot for it in crypto, and definitely is a spot around the EigenLayer ecosystem.
Got it. Yeah, that's helpful. Like, I think throughout this conversation, there's been a theme where both on the technology side, we're not trying to replace incumbents. We're trying to figure out the best way to slot into it. And similarly, on the token financial side, we're not trying to upturn existing regulation and financial paradigms. We're trying to figure out how best this new crypto financial token idea can plug into existing regulatory frameworks and stuff. Trade-off, you get the benefit of the token, but you need to also ensure that you're being compliant with the way the world currently works.
That's right. And part of the education that we do is, I think in crypto, early days in crypto, if you came in like prior to the 2018 bear market, you heard a tremendous amount about the security of layer one forking, security of blockchains and so forth. We've had kind of a honeymoon period for a long time where crypto has increasingly become successful, and the security of the layer one chains really hasn't been challenged in the big way. I still operate like a lot of the people who are maybe like along that beautiful catchphrase of like only the paranoid survive. Crypto was originally created with that idea that only the paranoid are going to survive long term. People, I know they love getting involved with more centralized type blockchains. We've got one on this cycle that's actually doing quite well. I'm happy to do throwdown arguments anytime on like why there's like theater of decentralization, and then there's real decentralization, and there's like key aspects that Ethereum and Bitcoin as well have that just are not being done in a lot of other parts of the space. So people have actually kind of, just not had to pay attention to, and it's kind of nice, but the fight is coming where the decentralization and the security of truly decentralized protocols is going to have to be tested across the world. Where the world's a dangerous place, right? And there's a lot of people that, as much as we don't want to think about it, we've got a lot of violence, we've got a lot of ill intent and stuff, and people are going to not be happy about losing power to the crypto ideals. So
it's a fine line. It's a gentle
It's a
dance.
fine line. And, EigenLayer is, in my mind, I joined it because it's fighting the good fight. So we are diving straight into an area that a lot of other people have kind of ignored, which is we are bringing the security to the forefront.
For sure.
So everything around EigenLayer that's truly unique. I mean, almost all the value in EigenLayer is added by the people who build these autonomously verified services or protocols.
Yes.
And they are crypto protocols. They're just using our API, right? And they're using some services from us. We have security as a service, right? Like another version of SaaS. And it's elastic security. Elastic meaning that, we will always make sure the pool of security of ETH tokens, ERC20 tokens, our own tokens, kind of rises to match. Right now, we have, a little bit of a tragedy of abundance. We have just more security than we need. It's great. In the beginning, you always have bootstrap stuff. Over time, we're going to need every single little bit of it.
Yes.
And, we put it in the front. So people need, in a lot of cases, to get a little more education about why that's valuable. It has really good, more than just marketing, increasingly over time, when people see, they learn by the hacks and they learn by the problems. You will see that fundamentally the most security from people that are able to do these very clever kind of security hacks. We saw them with flash loan hacks and others. There are times where transactions are actually exposed on Ethereum right now. there are absolutely transactions exposed on other chains, not rollups, but they're all tied back to Ethereum as well. So you can't overload security. So there's a very strong security architecture we've been pushing. A lot of the most gearhead crypto people truly are understanding more of that. And over time, when we try to bring in the Web 2 and the other financial world, they are going to ask, and they are going to actually try to understand this. Everything in business is about transaction de-risking.
Yep.
Who is taking on the risk and who suffers the losses if your transactions fail? Like, that is the reason why it's not rent-seeking to pay a couple of bips for foreign exchange settlement and other stuff. So crypto reduces that a lot, but there still has to be some paid to the security side, and EigenLayer kind of exposes that out there. So we're playing the long game. We're of course doing everything necessary in the cycle, the Web3 cloud and so forth, but we are, in my opinion, trying to build the firmest way that crypto can take, crypto can basically support the movement of the entire $2 trillion, software industry over, have all consumers running it. We ultimately want everything in the world in technology to have the user opt in or opt out of as much privacy as they feel they need, without giving up anything on user experience, without companies giving anything up on financial outcomes. So the whole economy is working in the best capitalist way possible. And we also want users to have very easy ability to have as much sovereignty as they want over their identity, over their data, over their reputation, and as much privacy as they want. We want a lot of these things to just be by default.
Makes sense.
And tech has completely given up on that. It completely has. And a lot of us have, unfortunately, kind of given in and gotten to a very pessimistic attitude that somehow fundamentally technology has to be that way. It does not have to be that way.
Yep.
Technology can actually serve humanity in a way that is not in the current one, where it's so it goes back to the incentives. If your incentive is to make a lot of profit, then you will actually make choices that are good for the corporation and your shareholders, but are bad for people. Biggest example being like radicalization, fake news, other things. They're not a problem. They're actually great for profits, but they're obviously not great for societies. I hate that part of crypto. That part of technology, and we can fix it.
Yep. Decentralization doesn't matter until it does. I want to come back to this idea of the economics of the security marketplace in a second, but the last point on the token, I would love to get your take. Like, explain it like I'm 5 in a couple sentences. What does the Eigen token do? And then we'll move on to something more about.
Oh yeah, so okay, I love saying this. It's going to have to be technical. So layer 1 forking is this idea that you have social consensus outside of a protocol where people decide which chain is valid. We've seen it with the ETC ETH fork that happened around the DAO hack. We've seen it in the Bitcoin space. We haven't seen it in some other blockchains. I really don't want to name names, but if you're not seeing the risk of actually forking a chain, it's not really a blockchain. You can call it blockchain, but it's not. Just like open source is not open source if you don't have to actually worry about getting your code upstream pull requests rejected, right? You have to have that tension, and there has to be human decision. Blockchains are designed so that they are mathematically programmed to do exactly the correct thing from block to block in validity. Social consensus out of a blockchain is what allows you to have forks, which at the blockchain level are kind of singularities. They break the math on chain based on humans believing that something else should be done.
Like a circuit breaker.
And so that's why social consensus is the most powerful aspect of blockchain. Without social consensus, it is not Web3. It is not actually crypto. It is not actually decentralized blockchain. With it, it is. So, so far in crypto before blockchain, that required L1 chains. People have actually made a decision. They need to be L1 so they can be sovereign, so they have this forking ability. EigenLayer invented, this is, kind of the genius of Sreeram and the original research team, and basically an off-chain forking that can punish the security of a token. It's a very high load for a token to hold. There's no token in the market that actually supports that right now. The Eigen token, if you look at the smart contract, has a fully compatible with the regular ERC20 in DeFi. Underneath that, there's actually a separate backing token, which is the unwrapped version of Eigen. You never see it. It's only there when it's staked. It actually allows the Eigen token to be forked off chain and to be slashed on chain for the people who are not accepted on the canonical fork of the token. And so we've actually brought off-chain forking without having to fork the layer 1 Ethereum. This conversation, Vitalik inspired Sreeram to really figure out a solution to it. Now that we have that new architecture block, what is architecture? It's a bunch of bricks, it's a bunch of wood, sticks, other things you build. Once you have this, the kind of structures you can build on top of it are absolutely marvelous. And so this off-chain forking capability is now available for everything. Because we actually do the peer-to-peer generalized software networks, this actually means that you can do cryptoeconomic off-chain forking, which is the strongest real version of decentralization to any software protocol without it being a blockchain. And you can couple it together with L2 rollups that are built on top of the Ethereum space that are using EigenLayer a little more proximally, or there's a very healthy rollup ecosystem. There's a very healthy amount of chains that you can just run inside of EigenLayer and have the coupled shared security in our space. So EigenLayer provides and absorbs that very high security load, unique token. That is in some sense the biggest value of the Eigen token. And it's probably, that's as far as we're going to go with the token. We're not a platform that's looking to like build vertically. You know, there are people who want to build vertical cloud. My version of the vertical cloud is 1,000 companies that all make a lot of money and have tens of thousands of very successful software developers behind them and entire business teams. So that's what we're working towards. And so that is kind of the, you know, the most underlying value layer of Eigen. And then it's expressed to protocols based on how much they get objective security on-chain slashing with ETH and the other ERC20s, and how much off-chain security that they have as a backstop to basically also provide that level of forking security against attacks on their protocol to, you know, rationally try to profit more than the cost from corrupting their protocol.
It's interesting. So we learned about the importance of forking as like a essential feature to true decentralization, and how Eigen kind of commodifies this ability to program forking into any kind of off-chain app. You don't have to build your own L1, and it gives this power to application builders. And yeah, I'm really excited to see what people will build. I think it's a very understood concept, like intersubjective forking and whatnot, just because it's a bit dense. But yeah, maybe we'll continue to be pushing content to educate people about this more.
Yeah.
I want you to put your businessman hat on, take the Eigen Foundation hat on, and I'm gonna share an idea about tokens, and I want your thoughts. So
great. On the fly.
Yeah.
We've not discuss this. All right.
I kind of view token as like a programmable equity. So there's equity in traditional sense where it's like business generate new cash flow, and cash flow flows to the equity, and that's how value accrual happens. And that's why equity is valuable. And if you're owning equity, it's a representation of your ownership in a business, and thus your claim onto like some sort of future free cash flow. And crypto is like, tokens are programmable equity because you have this aspect of value accrual, but you also have aspects of like a whole product programmed into tokens, such as Eigen token forking.
Yeah.
You also have aspects of protocol is like a product.
Yeah.
And then there's like a business entity governing it, which is like usually like a governance structure of a DAO. So you have the governance rights that are typically assigned to like traditional equity through like share classes assigned to tokens as well. So it's governance, it's utility in the sense of like programmed features in the token, and then as well as like value accrual in terms of like future cash flow. So how do you think about the role of token relative to like traditional equity? And especially like given the changing regulatory environment in crypto in America, I think we're going to see a lot of new paradigms, like a paradigm shift in like, how can we actually create businesses in a better way using token as a substrate for equity?
Yeah. This is a really good point. I fully agree with you, violently agree with you. I will build on it with a little bit of a nuance there.
Okay.
That, you know, when I talk about the entire tech world moving over, that actually means a lot of NASDAQ and a lot of S&P 500, you know, stocks are going to be moving over. Those are not going to be moving over to decentralized protocols and decentralized token theses like you have in Ethereum and EigenLayer and so forth. So I want to break into kind of two distinctions. One is there is a future where, you know, stock, which is extremely inefficient to handle, has, you know, it has some good features, obviously, with it. It's worked for us for a couple hundred years. You know, we've gotten a great coordination, but, you know, tokens that are essentially replacing the real world asset of stocks and kind of are absorbing very similar, you know, structure and kind of semantics, you know, the meaning and the syntax of the tokens are going to exist. And they're going to be probably scale out of maybe the majority of, you know, what used to be NASDAQ stock markets. NASDAQ will be adopting crypto markets and tons of tokens that will be replacing it. Maybe there's a day in the future where there's an NVIDIA token, right? And this token is like capturing $3, $4, $6 trillion worth of value, you know, with growth stock, with dividends, with everything else. And that's, in my opinion, going to be regulated almost exactly like current stocks. and it's going to be a beautiful thing. But there is this other aspect of tokens that I want to distinguish from that, because it's going to be a separate kind of regulatory thing, because it is decentralized. It does not have a C corp behind it. It is a protocol. It utilizes different features. And, this could be another podcast because it's actually a deeper discussion, but I'll kind of say it since it's educational about EigenLayer. And, in some sense, we haven't talked a tremendous amount around the token narrative. And I don't want to jump into that because I think we kind of officially want to kind of work with the community and figure out what that exactly is going to be. But one of the sort of thinking in there, let me actually put this as think about this as a forum post. Okay. I'm not saying this is the true thing. And this is one that I would kind of put my name and kind of do a little bit of championing potentially behind, is that, what is the reason why something potentially, is out there and people are having it? It's kind of why would you hold something? And regular stocks operate very much on this idea that, if the revenue and the PE ratio is good right now, then you get a P multiple, 4x in industrial, mature technologies, 10x and a little bit more advanced, 30x in software companies, and then far out, Tesla 1,000x, 5,000x. I mean, it gets kind of nuts, but that is not that they're saying it's worth that multiple. That actually is a growth stock, meaning they think that the revenue is going to build to that level in the future.
Value.
But so it all is kind of based on this idea of yield in regular stocks, right? So the companies are generating yield by revenue that eventually goes to the stockholders in some way. So that is a totally fine thing. But there is actually another reason to hold tokens, right? I mean, in Ethereum, you hold tokens because there needs to be security in the network. There may be the layer twos that stake an Ethereum token, and then you have, all of these various rocket pool, ETH, and so forth. Put that one first because it's quite decentralized, but they're all, I love all the staking tokens. I don't mean, if I didn't say it, I shouldn't even have said one. Love them all equally. So, but those tokens, they are higher risk tokens. You can buy and sell those, but they can depeg.
For sure.
Right? The security of Ethereum itself is insulated, and the absorption and the risk by people who are in liquid pools, they absorb risk. But Ethereum will still march on. The liveness and the security of the chain will go on. So, EigenLayer, I'm sure people are going to do liquid staked versions and others, but the core staking is very much on that Ethereum view. There is security that is needed in the space.
Yes.
And if you're going to be, using Eigen tokens to secure your protocol, you have two choices. A lot of people are going to kind of elastically scale, but think about in Amazon, if you want to be cost effective, you're going to own some hardware through multi-year contracts, or maybe even have some off-chain hardware that you use that you fuse together with the cloud. So there will be a lot of reason for protocols to actually hold Eigen tokens. Most efficient, they're not subject to the varying price of Eigen, where, it's going to kind of change, what they're potentially seeing in the marketplace for getting Eigen scarcity and so forth. It may be hard for them to get enough security eventually at some point. In some sense, good for us. That probably means that the protocol is so valuable, the demand is high. When the demand is high and the supply is limited, that actually is a good story, right? That's the scarcity story. So the whole thesis is a reason why people would have a token. It is completely unrelated to the rewards, right? There will be people who are holding Eigen because of some kind of rewards thesis, but there's going to be a baseline floor of holding, and so liquidity off the table, non-circulating supply for that security reason, just like there is for Ethereum, just like, you see it in these other spaces. So a thesis like that we actually have, which in some sense people kind of call us an L1 protocol, because we operate at this L1 security layer, the holding for security layer, and then the off-chain slashing, those properties. It's nice. We don't compete with chains, but we actually have this critical aspect and then can put it into chains.
Interesting.
So that's a different thesis. Again, like I said, it's a forum post, let's all kind of hash it out in the space. I think there are smarter people. Our head of, research, we've got actually a whole research team on the tokenomics side, the robust incentives group that, the EF and others, we talk with those people. Tim Roughgarden heads up, great crypto economist all over the space. He actually wrote definitive analysis of 1559 back in the day before it launched. We're going to want people to all kind of look at that in the space. We already have on contract, some of the best crypto economic think tanks in the space that are consulting with us and giving a lot of attention, showing people how to deal with the security DeFi protocols and move into this place. We eventually need, I mean, I'm like, might be too optimistic in blockchain. This is not financial advice, but like my feeling is that the blockchain space is going to take over the economy, you know, full stop. Like financial, all the security that's needed for healthcare, for commerce, you know, for like better supply chains, for the energy markets, all of it, right? And so that means then that the crypto market eventually is going to have to be able to secure hundreds of trillions of dollars of real world assets, mixing those financial assets. And it's going to have to be able to de-risk those transactions at sometimes trillions of dollars of value at risk over, you know, multi-second or sub-minute type periods. It's got to be able to absorb it. So that's the scale we're building for, you know, transactions per second scale, low latency scale, infinite storage at near zero price scale, infinite compute, near zero price scale, infinite security at near zero price scale.
So this is like a perfect transition, and I guess to the last topic we want to talk about, which is like the economic marketplace that is EigenLayer and scaling that. So you mentioned earlier that we're in a bit of like a situation where EigenLayer has just launched. It did tremendously well in sourcing supply side deposits. So the security is there. And now, from my understanding, EigenLayer's focus is on supporting AVSs in building products that use this security. And from my understanding, like the more market fit we have on the services side, the more value that they're going to be securing, and then thus the more security they're going to need. EigenLayer only works if there is like high product market fit AVSs with high security demands that enable part of their revenue to flow in through EigenLayer to restakers, like as kind of like a security budget. Like you're paying for security through EigenLayer, and the operators and the stakers get compensated for that. Right now, 4% of Eigen supply is like being allocated towards programmatic incentive to kind of subsidize this flywheel, because Rome was not built in a day. It takes many years to build a sustainable cash flow generating business. So I guess, and I really like the future you just painted, where there's trillions of dollars in the world, and there is like a 10x value prop in letting that value be secured by something harder than trust.
Yeah.
We don't want to be like, we know all about the problems of principal agent risk in healthcare, in social media, in looking at authoritarian governments around the world. And if this can all be like this intermediated and backed by something hard like crypto economic security, it's amazing. But so that's like the future, trillions of dollars secured. And right now we're in a state where, okay, maybe there's like a 10 plus billion in supply and not much demand because we're scaling AVSs. How do we get from point A to point B? And like, what's EigenLayer's vision for getting there and to make it sustainable?
We heads down. We do not try to flutter in the breeze to every wind that kind of shakes us. You know, if I want to give something that probably is financial advice, like crypto, crypto is extremely volatile. You know, every single token out there, all tokens are extremely volatile and stuff. If we actually paid attention to that, then we never get any work done. So we just build, we've got, of course, our war chest. We're very sensible about making sure we have stables, what we need. The protocol's not going away. We're able to fund internal initiatives. We're able to fund external initiatives. We have, no limit. We're kind of limited by like how fast we can coordinate and get stuff done. So we can just build. And then we can also get the message out. So educate, motivate, support, and then do our own job building. That's got to be the emphasis. It's the only way you can create value. And, creating real value is when, you build something that's the, opposite of the meme coin craze.
Yes.
I think it's actually very telling to me that in this cycle, previous cycles, you had a mix of like a lot of meme coin crazy activity in Ethereum together with real good stuff. We happily have another chain that's absorbing all of the crappy meme coin stuff. I'm actually really happy about that. That's great. Like why, we don't want that. I hate pump and dump and I hate meme coins because who loses in that? Retail investors, Like I said before, the whole point of like, what you need to do is protect the public.
Yep.
I want people to have freedom in financial markets, but I don't want them to have freedom to lose money. I want them to have freedom to actually have a better financial future. I want to, get people off of, playing lotteries and, DraftKings and other things. Like just invest your money, It's like, it's a reasonable thing. Again, not financial advice, but,
I agree. I'm building a DeFi project, and trading is for the normies. Like, how do we get normies to use crypto? What's going to be the catalyst that lets everyone enjoy the benefits of internet finance? Like right now, the only PMF is trading, and that's like, hopefully, we're working on stuff. You guys are working on stuff. Eventually, like the value of internet finance will be given to normies. It's going to happen. But
fix the friction, make it automatic. that users are protected, from hacks. The meme of the guy absorbing all the arrows so the baby can sleep at the crib. And then, the final one is make sure that fundamentally, apart from hacks, that the protocols just have the right security and that they have the value proposition. So across the space that we're in, which is the Ethereum space, it really has the best builders in the world.
Sure.
Like, us saying, I said in a talk recently, it's not us, but Ledger Capital who follows developers. 2024, we had the fastest growing developer ecosystem in the world. And, that's not with us having the best BD in the world. In fact, I actually say, like, we're getting better. A lot of people said, like, 2024, we really upped our game on it. But it's just that it's got product market fit to people want, what the people who are building want. They're able to, get investors in, get capital. They're able to get the security. We have 4 flywheels in EigenLayer. Final thought, flywheel 1 was like making sure there's TVL and security available. Flywheel 2 was making sure we had, the best operator decentralized market with very low friction to just go ahead and use it. You can decentralize right away on EigenLayer with both the security, high level of security, high level of operator decentralization through an API. Very easy. Third level is to have enough AVSs that are kind of supporting every possible use case we want out there. And then the final one is consumer, which again, forum posts, my view of what consumer is, not fighting against individually with every protocol, fighting against the analog of like Farcaster going against the, Twitter and TikTok and Facebook, Web2 data lakes, but have all of Web3 data, all Web3 identity be in one data lake, right? You are able to, access and utilize all of your assets in Web3 anywhere. They're all portable. And plus, every new chain that is built on every new software protocol, every new software company that builds on EigenLayer, it is in the network effect already. I mean, just imagine you can build and use the network effect of every single Web2 company out there. And you've got the reputation and the information of every single thing that a person selectively wants to disclose with you. Selective disclosure equals privacy. That is the future of Web3. We took on a hard problem. That's okay. We like it. But for flywheels, I'd actually argue that, the AVS flywheel, the protocol flywheel it's spinning up. It's still going to be spinning up faster and so forth. So a lot of the focus this year, you're going to see around consumers, around AI, around agents. That's where the consumers are. And they're also doing the hard work. I mean, identity data and kind of normalizing and making it work. This is not for the faint of heart.
For sure.
And so we're going to do our part to it. A lot of protocols are going to do their part as well.
Yeah, I really respect that view. Like I'm a younger guy. I have been in the trenches, quote unquote, and I have seen the ways that there's like builders that can focus more on like not demand, everything but demand. And there's actually ways to create multi-million-dollar outcomes in the industry by optimizing for everything except product. But I respect like the space is trending towards fundamentals. People have been like rugged too much from buying things that are not backed by something of substance. So I can really respect the laser focus on scaling demand and scaling real value creation. And on that note, I think is the last question. We have a lot of like cracked builders listening to this podcast and in our reader base. And in terms of like building, that was the core theme of your last response. What are some of the ideas that you're most excited for to be built in the Eigen ecosystem? Just like personal ideas, and maybe somebody who's listening will eventually build it. Like Opacity is great. They're doing Earnify. I've heard of ideas of like replacing Goldman Sachs with an EigenLayer bank where all the commitments are verifiable. What are some like crazy ideas that you're looking for the community to build?
I will actually say it is important for a person. I think to me, a market of intelligence is also say when I'm not the best person to talk about things. I think, I will refer people, the absolute geniuses on this. We have, I think, one of the best people like ever in DevRel. He, bestowed on us his presence to like join EigenLayer. Sometimes people who join tell you how good a protocol is. His name is Nader.
For sure.
I think Dabit3 on Twitter, DABIT 3. Follow him immediately. Watch his 3-minute videos. Tons of hackathons where we actually have requests for proposals. There's some write-ups that have been done by Sreeram and the team of like the crazy far-out ideas, like our millennium ideas. Just pick them up and look at them. Be inspired by them. There's so much more you can do with the new constructs, the new architecture building blocks of EigenLayer. But if I actually try to say some things, I'm going to be giving you like a dull, fuzzy thing.
I see.
And I want people to hear the crisp and the best. So go listen to those.
Okay,
guys.
we will make sure to pull some resources and link it in the show notes for
Yeah,
the viewers.
please do.
Yeah, but Robert, it's been a pleasure. I learned a lot from this conversation, and I appreciate you taking the time to do this podcast.
All right, thank you very much,
Yeah.
and thank you anybody who got to this point. That's great. Feel free to always reach out. You can reach people on DMing, Twitter, other things. You'll link my Twitter, but
Sure.
RJ Drost, RJ Drost on Twitter, RJ Drost on Telegram.
Perfect.
All right.
Well, yeah, enjoy the rest of Ethan.
All right.
Thank you.